Hey, what's happening, everybody? Tim from Alpha Wolf Trading coming at you with another CEO interview with a company I just recently met and I think has a very compelling story, has an interesting looking chart, and we'll get to that in a little bit. Ideal Power, and the ticker symbol is IPWR, and I'm privileged to have Dan Bradr here to tell us a little bit about himself, the CEO, and his background, how he got here, and then we'll get into the meat and potatoes on the company. So, Dan, first off, thank you very much for coming in.
Thanks, Tim. Pleasure to be here.
And I'm interested to share with everybody your story. And if you can, just do me a favor and give me a little bit of background on you and how you got here.
Sure. Well, I'm an engineer by training, and I have always been involved in bringing new technologies to the marketplace, getting them through that stage of having a great concept, turning it into something that is actually a workable concept, getting into manufacturing, and then ultimately commercializing it. So for me, this is one of like several that I have been through, and it's for me, the interest is really on technologies that can really have an impact, either because they can improve energy efficiency or improve the environment, or both, preferably. I've had a whole variety of roles in my career. I spent quite a bit of time at the Department of Energy, eventually became an associate director of one of the DOE's national labs. I got recruited from there to go to General Electric, and I had the good fortune of running the gas turbine product lines during the boom of the gas turbine business. So I got to see a lot about how to really successful companies ramp up supply chains, production, best practices, and bring out new products and new technology at the same time. From there, I went off to do more into energy products, things like fuel cells and solar, and ultimately got recruited to come to Ideal Power. They were looking to take the company public. This was back in 2013 or so. I told them at the time, I said, deals that could get done for companies going public on IP with no revenue were great in the 90s. I'm not sure if you can do that now, but if you have a successful IPO and you want me to come after that, I'm happy to do so. And they did. So then after they'd raised money with a temporary CEO, they called me and they said, "Are you a man of your word? Are you coming or not?" So I said, "I'll be there." So, came here and had a great time with working with some really talented people, bringing some new technologies to market that we think are going to have a pretty big impact in some spaces like renewables and electric vehicles and data centers and a few others that really are going to ride some of the macro trends that are happening in the world around us.
Okay, so when did you actually come in and take over as the CEO?
I came in January of 2014.
Okay. And throughout that, from then until now, mm-hmm. what has been the focus?
Well, we started and the company went public on the strength of a power converter technology that was really focused on renewables coupled with energy storage and standalone energy storage. The technology was really well suited for the commercial and industrial space, and that market was really just getting started at that point in time. We captured a lot of great customers that were bringing solutions to end users, companies like Mercedes and Sharp and others that were going to bring power converters coupled with a software platform and energy storage batteries for things like utility demand charge management. And then I think what everybody saw, including the folks that were our customers, the Mercedes and the Sharps and others, was that market was going to take a long time to develop. The commercial industrial space, they're pretty savvy customers. And I think to some degree, the folks in the battery space, they kept touting about how battery costs have come down year after year and are going to continue to do so. And I think most industrial CFOs are saying, well, if I wait a year, it'll be cheaper. So what we started to see was our customers, the Mercedes and Sharps and Gexpros, those companies exit the space because they realized it's going to take a couple of years. And we did the same thing. We said, look, the companies we want to sell to that are bringing the solutions are exiting. We're going to do the same thing. We are going to sell off the power converter business, which we did. We sold it to a company called CE+T. They are a company that won the Google Little Box Challenge for power density. So they really understood the potential of the power converter technology. And we actually, at that point, shifted our focus onto our semiconductor technology. And that's what we've been doing for the last couple of years here.
Okay. So you switch focus to the semiconductor technology. And now what is the big differentiator for you guys in the marketplace?
Yeah, there's a couple things that are really unique about what we're doing. Our semiconductor technology is used for power switching. So applications like electric vehicles and energy storage and renewables all use semiconductors for power switching to convert DC to AC and vice versa. What our technology does is a couple things. One is it's inherently bidirectional. So you can use one device to make a bidirectional switch instead of 4 devices, which is the way it's done with conventional technology. And it can do it with much lower losses. So it's much more efficient in terms of the amount of useful energy that ultimately can be, delivered to the application. So things like an electric vehicle can have a longer range, or a solar panel can actually generate more electricity. So it's really about bidirectionality because of the use of batteries increasingly in a whole lot of applications where you have to both charge and discharge batteries, and doing it a lot more efficiently and doing it with conventional silicon processing that's out there today.
Okay, so it's proprietary to you guys. The technology is proprietary to you.
It is. We invented it. We now have 65 patents that have been issued on it, another 27 pending. Our patent coverage covers, of course, the US, Europe, China, South Korea, Japan. So great global coverage. And then what we've also done to protect the technology is we've gone through a lot of work with our semiconductor wafer partners, companies like Teledyne and others, where we worked to how to make a double-sided device. And those processes we treat as a trade secret. So even if somebody were to study our patents, they would have a lot of work to figure out how do you actually make it, even if you knew how the device worked.
So, I think of, I'm thinking of a company right now, and I don't know if you're familiar with them, but they're called, it's called Nano Dimensions. Do you know who they are?
I'm not familiar with them, no.
So they're basically a 3D printer, and they print circuit boards, right? So, and I guess the advantages that they have is the fact that they can print and have a double-sided circuit board, where normally you would have to solder, and it's usually too thin because you burn right through it if you solder both sides, right?
Yeah. Yep.
So I mean, I don't know if you've looked at that, and I don't even know if that would be something that you guys would want to look at, but it would seem to me like that was because you're reducing the weight, right? I mean, by going from 3 chips to 1, you're reducing the weight, which is really important for a lot of different things, right?
You're reducing the weight, you're reducing the part count, which are just parts potential for failure. You're generating less heat, so you need less material for thermal management. So it brings a lot of advantages. Yeah.
Right. Okay. So the question is, I mean, has the technology, I mean, have been proven? I mean, it's in use cases and it's being tested. What, I mean, where are we in terms of, commercial launch?
Sure. This is the year that we're really focused on commercialization. We have spent the last couple of years working on how do you make the device in a traditional semiconductor fab? How do you package it up? And our plan this year is to put what we call engineering samples into end users' hands, the OEM customers like the automobile manufacturers and the solar power companies, to evaluate the device. And what we're doing in parallel with that is we have a program that was funded by the US Navy, where we're doing the demonstration of a solid state circuit breaker, a very large solid state circuit breaker, 12 kilovolts, that we're doing in combination with a company called Diversified Technologies, where they bring the circuit breaker expertise, we bring the semiconductor expertise, and together we're going to do this large scale demonstration of a solid state circuit breaker that's enabled by our technology.
Okay. And that could potentially lead to
a whole variety of things for the government applications. For one thing, the Navy wants to go to ship electrification. The Army wants to be able to have microgrids. All those things need solid state circuit breakers. And then we also have a project that we're doing with the Department of Energy that is an AC circuit breaker, unlike the DC circuit breaker that we're doing for the Navy. Alternating current circuit breakers can be used by the existing utilities. So the infrastructure that's out there now for our utility and distribution system could use solid state circuit breakers as they start to improve and sort of bring up to date the utility networks, especially with all the distributed generation that's going in for things like people putting solar in their businesses and their homes.
Okay, so we're talking, the benefits are it's more efficient. So it's reducing your power consumption, right?
Reducing your power consumption, should be inherently more reliable, because you think about like a traditional circuit breaker, they are electrical mechanical devices that wear out. Solid state breaker, there's no moving parts. It's all done with semiconductors, the switching. So it's more efficient, fewer parts that can actually wear out. They're about 100 times faster than a mechanical circuit breaker. So the level of protection that they provide is substantially better. So it really becomes an important step forward in terms of how utilities can control the grids and respond to issues that come along when we get disruptions.
So, and I mean, I'm thinking about, you know, the big power consumption industries right now.
Yeah.
I mean, even cryptocurrencies, right?
Yeah.
The mining of cryptocurrencies is an issue because of the amount of power that it takes to mine one Bitcoin, right?
Yep. Yeah.
Data centers, another huge consumer or consumer of power, right?
Data centers are a great example. I mean, data centers, their largest operating cost is electricity usage. All the electricity that comes into a data center has to go through a UPS system. That's the device that basically, if there's a disruption in the grid, it has to act quickly to transfer the data center to a local source, like a on-site generator to keep operating. Well, all the energy that flows through those UPS systems creates heat. So if the semiconductors that provide that function of shutting off or switching the direction of power in a UPS system were more efficient, the data center would save money. We did a little analysis ourselves that said if the average UPS system in a data center used our technology instead of the traditional semiconductors, they'd save $2 million a year on operating costs. So huge impact in terms of the potential operating costs for things like data centers and other applications that are just high consumers of electricity.
And more efficient, right?
Yeah, exactly.
Right. Okay. So all the potential use cases. So you're looking at commercial, industrial, motors, rail.
Yep.
UPS. What is UPS?
UPS is the uninterruptible power supply that protects the data center.
Okay, got it.
Yeah.
So storage then.
Yeah. Well, the UPS actually is like a safety switch that sits at the front of the data center. And if the quality of the power from the utility goes bad, that switch senses it and switches the data center to an on-site generator instead, so that it doesn't suffer a power outage.
Okay, got it. And then renewables and of course vehicles, right?
Yes, correct. Yep.
So when you've got the oil fields up there, I'm curious as to what that's for.
Well, it's really just an other category. There's just lots of other applications that, things like the solid state circuit breaker are in that other category where they're not a big market yet themselves, but there's a lot of places where our technology can apply because power switching is in everything that we use every day. I mean, from your laptop to even your conventional combustion vehicle has power switches, semiconductor power switches in it. Your microwave, your washer, your dryer, refrigerator, power switches are all around us. And if you get more efficient technologies, people consume less energy. They can be more environmentally friendly, but more importantly, they can be lower cost.
Are there any materials used in your semiconductor or your switch that is, I don't know, that could become a problem, like scarcity of any of the?
We use silicon, which I think is the second most abundant element on Earth. So we're not too worried about it. In fact, we spent a lot of time figuring out how do we take this technology and have it made in a very conventional semiconductor facility. So there's no capital required to invest in the facility. It can use 10-year-old semiconductor processing to make it. That's a big part of what our development has been, because we want to be able to go anywhere to make this thing and leverage this huge investment that is already out there for semiconductor wafer processing, rather than have to spend our own money or our partners spend money to be able to make it.
So with vehicles, with vehicle or car companies, I know that the sales cycle is extremely long, right? To get into a vehicle.
Yep.
Although I think, and maybe I'm wrong, that probably has to change.
Oh, it is definitely changing. We're working with a couple of different of the major automobile manufacturers, and the established players that we think of as the traditional brands out there, at least of the ones that we've talked to, have all finally come to the conclusion that they're late to market with electric vehicles. So rather than relying on their tier one suppliers, they've all created some pretty substantial teams in-house to evaluate technology, to figure out what's their drive platform going to be, what are their electric vehicles going to look like in terms of the technologies they're going to incorporate, all designed really to take at least 2 years out of that design cycle.
And that's big. That's really big, right?
It is. They are very serious about it. And the great thing is they're really open to evaluating all kinds of new technologies as a result of that, because they don't want to come out with something that's just a copy of what somebody else has already done. They're looking for, hey, this is really a chance to innovate. Our entire platforms are changing. How do we bring out something that's going to have, lower cost, longer range, or both,
So you don't intend on, if I remember correctly, you're not intending on being the manufacturer, right?
Correct. We're an asset-light model. We will work with partners to fabricate devices for us. The fabless model is actually pretty common for a lot of technology companies in the semiconductor space, because owning a fab is it's a tough business. It's a very capital-intensive part of the industry. You have to have really high utilization, and when you expand capacity, it comes in big chunks. So we're going to leverage that infrastructure that's out there and partner with players rather than actually have the wafer processing facilities ourselves.
And I think one of the things that you said that I happen to like quite a bit was you're also looking at manufacturers right here in the good old US of A.
It is. We're using Teledyne, a fab in California that we've been using for our development work. We've just recently gone through qualification with another domestic fab. The company that we use for the packaging, where the dies themselves are packaged up for electrical connection, that's done here in the United States, because we really do have some great talent here still. Even though a lot of the manufacturing's moved offshore, the technical expertise is still here. And that's what we want to tap into, because we want to find great players that can grow with us.
Right. And you want to protect your intellectual property, right?
For sure. I've had people ask me when I'm taking this to China. I said, not in my lifetime.
And I love that, Dan. All right. So let's see. There were some other things that I definitely wanted to ask you about. So are you at the point right now where you've got the manufacturing process figured out? I mean, if tomorrow you got a big order for whatever, right? Yeah. You've got all that nailed down. I mean, are you ready to go?
That's really the point that we're at, is taking that process that we have developed and now transferring it to a larger fab, because the development fabs that we work with, they probably can't handle a lot of business. They're really designed for development, running small lots, but we would transfer that, whether it's to another Teledyne facility or another domestic fab. We've got that ready to go so that we can actually bring another fab up to speed. And same with packaging. We've got a high volume packager that we're working with that is actually doing some trial builds right now, so that as the orders start to grow, as we start to ramp up with some of these customers, we've already got the capacity piece of that ready, and they're just basically waiting to get the go signal from us.
Okay. And then do you have any do you have any partnerships in terms of distribution or sales, or are you doing this all? Is the sales all internal? How is that happening?
Today, it's internal simply because when you're introducing a new technology, you've got to get pretty engaged with the technical teams of your OEM customers to get them up the learning curve. Our view is that we will continue to do that ourselves for a little while, and then we will actually put parts into the distribution system, because a lot of semiconductor devices are sold through distribution. But then also to satisfy the really large players like the automobile folks, we've told them, look, if you're concerned about an alternate source of supply, or making sure there's somebody else that's out there that is a big player, we're willing to license this technology to another major player to satisfy those concerns.
Okay. And then, so it's kind of an interesting area where you guys are right now, right? Because
it is.
if you start to land some big contracts, then I think you become a very appetizing, potentially takeover target, right?
Yeah, I hate to admit that, but yeah, I'd like to have a couple zeros on the market cap before we start having to worry about that.
Well, yeah, I mean, listen, I'm not suggesting. I mean, look, it would be a shame if you get all the tech proven, and sales start to ramp, and now it's becoming more of a common, people are recognizing it. It would be a shame to sell the company early on,
yeah,
when you haven't really fully hit, you don't have the sale, the wind hasn't hit the sails just quite yet. You know what I mean?
Yeah, and while it's a concern, knowing the space, I don't worry about it too much, and I'll tell you why. One is, the semiconductor space, especially on the power side, is all about scale. The players that are out there, Infineon, onsemi, they're really big. So acquisitions have to be ones that are accretive, that kind of move the needle for them. So you got to have some pretty substantial revenue by the time they're really looking at you, because from an investment and an R&D standpoint, they're completely focused on alternate materials rather than alternate architectures, which is what we've come up with. They're focused on wide bandgap materials like silicon carbide and GaN, and that's where all their attention is. And that's where they're pouring all their money in terms of the R&D and other things that they're doing for scale up. So I think we've got plenty of room to run. And then when we get to the point where we've got some pretty significant revenue, I think then we start to get on people's radar screen, potentially from an acquisition standpoint. But it is interesting.
So that's a good question. So with all these other materials, right? Mm-hmm. The GaN, and I've met with companies that are GaN, and I mean, with all these, is there the chance that some new semiconductor or new material could make it so that what you're presenting is not isn't needed? Well,
there's lots of smart people in this space, and there's always a chance somebody's going to come up with something new. But two things. One is, there hasn't been a new architecture that's been invented in the power semiconductor space for decades. So, the conventional IGBTs and MOSFETs have been around a long time. Our technology, B-Tran, is the first new architecture that I'm aware of that's really unique in quite a while. The good thing is, this focus on the wide bandgap materials, things like silicon carbide, is actually good for us, because our technology can transition from silicon to silicon carbide, just like the conventional technologies have done. And in the meantime, while there's investment going in on silicon carbide capacity, making wafers lower cost, more available, higher quality, we'll benefit from all that when we make that transition from silicon to silicon carbide.
Okay. All right. So what do you see, I mean, in the next 6 to 12 months, yep, right? I mean, you guys are good on, you're good on cash, right?
Yeah, we've got several years worth of cash on the balance sheet, no debt. So right. We've got plenty of runway.
I think the burn was what, somewhere around 4 million or something, like, what was it?
Yeah, it was 4.5 million last year.
4.5 million.
And we finished the year with 23 million in cash.
Okay. And I think you and I talked about death spiral financing.
Yes.
And I know that you're not a big fan of that.
I am not. I don't like debt. I don't like convertible debt. It's just that's just a bad path to go down. It's for small companies in particular. You can't dig out of that.
Okay, so let's just reemphasize. How much debt do you guys currently have?
Zero.
Oh, beautiful. And you have how much in the bank?
23.2 million, I think, at the end of the last year. Yeah.
And then warrants or preferreds or any of that? What are you looking at there?
There are some warrants that are left over from prior times. Some of those were like at $2.32. So the warrants that are a bunch of the warrants that are out there are deep in the money. No convertible preferreds, none of that.
Okay, so pretty clean cap table.
Yes.
That's music to my ears, Dan. All right, so where do you think you're going to see some traction? What industry do you think you're going to see some traction in first?
I think you're going to see, in terms of finding the technology finding its way into product, is going to be on the industrial side. It's going to be things like EV charging rather than the EV manufacturers themselves. It's going to be renewables, particularly renewables coupled with energy storage. It's going to be on some of the industrial applications like circuit breakers. You're going to see us do things with the automakers because we have to start that cycle. As you rightly pointed out, it's a long cycle, so you have to start it to get through that whole process. You're going to see some of that from us here this year as well. The good thing about the automakers is because their needs are unique, they'll actually pay you to do things that are unique for them. They might need things packaged a certain way that the industrial companies don't. Well, they'll pay you to do that. When they evaluate technology, they're not looking for a dozen devices to evaluate. They're looking for hundreds or thousands. So they'll pay you for that. So we'll have revenue with them before we're actually in an automobile product. And in the meantime, those industrial sectors will provide our early product revenue as they start to incorporate it, because their design cycles, are a year to a year and a half for a new product versus, 3 to 5 for the automobile manufacturers.
So you're kind of in a difficult spot because a lot of the times the companies that you're working with don't want you necessarily telling anybody that you're working with them, right?
Correct. Yep. We hear it all the time. Nobody wants their competitors to know what they're doing, especially if they feel like they're behind, So, but we do have an advantage here in being a small company. As we start to get more involved with these players, as they start to place orders with us, as we start to do co-development, we're going to have the candid discussion that says, we're a small company, it's material for us, we have to disclose it. So, part of our agreements will say, that we have to have terms that allow us to fully comply with our regulatory and listing requirements, which I think will give us the opportunity for some of these folks to let us name them, which will be good because the folks that we're working with, the companies that are in our sampling program are names that people would recognize.
Right. And that's, I know that a lot of times, especially with smaller cap stocks, the investors, the retail investors, they start to get really irritated when they don't see a press release or they don't, get a name that, it's just part of the game. And also with even dealing with the military, there's another hush, keep quiet, don't want to talk about it, right?
We're actually contractually obligated with what we're doing in the Navy that anything we disclose that has to have their written approval. Even announcing the program, the press release that we got it required their approval, and it wasn't quick. It's just the nature of working with DoD programs.
But you feel very, very good with where you currently sit and where you are in the cycle of this development phase.
Yeah, I'm pretty excited about it because we've spent a lot of time and a lot of effort to get to where we are, and now we're actually starting to get engagement. Just to give you sort of a frame of reference, this past week was a conference in Houston, the American Power Electronics Conference, where it's all of us geeks that work on this stuff get together. Well, Ideal Power is the one that won the award for the best presentation, talking about what we were doing in our technology. So we're getting the peer recognition now. People are realizing that hey, this is a big deal. You know, these guys really have something special, and we feel pretty excited about the fact that we're working with really large customers that could be real game changers for us, and that are also looking to help us be successful. They want to introduce us to maybe packaging firms they work with, or engineering firms that they work with, to help us tap into some of the resources that are out there that might be tough for us to get the attention of as a small company.
Well, you know, it's interesting too, because I just met with a company, was it yesterday? I don't know, they mesh into one another, but oil and gas company, but going to renewable, you know, hydrogen, and, you know, made a very interesting point that ESG, I mean, which is, you know, a huge thing. And the SEC, I noticed the other day, I think it was 4 or 5 days ago, announcing that, you know, they're going to start requiring in the company's carbon footprint, right?
Yeah.
And you know, these companies are going to have to, I mean, the time is now, right? There's been a lot of pressure put on them to reduce their carbon footprint, reduce their power consumption, right?
Yep.
And I'm looking at you guys and saying, you're in the right place at the right time with the right product.
Yep.
Right.
Well, think about it. I mean, think about like sort of the 3 macro trends that are happening right now. Everything is moving to the cloud from a data standpoint, which is going to drive the need for more and more data centers, which are huge consumers of electricity. We actually can make that more efficient and economical with our technology. There's a great move towards the deployment of renewables, particularly more solar and solar coupled with energy storage. We directly impact the performance and the cost of those. And then this transition to electric vehicles and the build out of an EV charging infrastructure. Well, our technology can bring more range to those vehicles, help reduce their cost, and help speed the time of charging because it's more efficient. So we're fortunate that we're bringing a technology out when we've got really 3 macro trends that all kind of move independently of one another that really will be adopters of our technology.
Let me ask you another question. So, you know, we talked about quickly, maybe somebody coming up with a chip or a GaN or whatever. Is there the possibility that, you know, combined with the GaN, you guys become even more efficient as a...
It is, and that's part of why our long-term roadmap is we'll go to silicon carbide versus GaN, because silicon carbide is better suited for high power, which is where our technology is well suited. But you know, we will make silicon carbide devices better because of the architecture also. So we'll improve the state of the art of silicon carbide devices when we ultimately transition to silicon carbide. Today we're focused on let's prove ourselves in silicon, because that's still overwhelmingly the biggest part of the market. But yeah, we'll benefit in terms of blending the capabilities of our technology with the enhanced material properties of silicon carbide to make an even better device.
Right. And then maybe down the road with GaN or whatever else comes out, right?
Yeah, I mean, exactly. Yeah.
Because it's the action that yours performs, which is both directions, right?
Yes, exactly.
That's the key.
Yes, it is. Yep.
Okay. So let's see how many, so so you've got a total of how many shares outstanding, fully diluted? Is that?
Yeah, shares outstanding is about 5.8, 5.9 million. If you fully diluted, we're about 7.4. Yeah.
Okay, still 7.4 million.
Yep.
Which is super tiny.
Yes,
right?
It is. It is.
What do you consider is the size of the addressable market for you guys?
If we really play in what's called the IGBT market, and that's projected to be about $11 billion market by 2026. It was about $6 billion last year. So it tells you how fast it's growing, and it's driven. Think about this one. The biggest segment of that market is already electric vehicles. So when you think about how early we are in the adoption of electric vehicles, you know, it's clearly a big driver for growth. The second biggest segment is already renewables. So it's just a market that's just got decades of growth ahead of it that is double-digit growth. So that's why I say we're really fortunate that we're bringing this technology out at really the right time in terms of the markets that are really going to benefit from it.
All right, so now we're going to talk a little bit. I'm going to get a little geeky on you here. I'm going to go with some technical talk, but this is the long-term chart of, and it's not a pretty chart. I'm not going to, I don't sweet talk anybody. I mean, this is not a pretty chart. If you've been in this stock for, since 2015, you're not a happy person, right?
Yep.
What's interesting though, and small and micro cap and stocks have been getting pounded for the last 10 months. It has nothing to do, in a lot of cases, doesn't have anything to do with company specifics. It has to do with the sector. It just has not been in favor.
Right.
And you guys did a reverse split back in 2019, right? 1 for 10. And then the stock, just kind of went sideways and consolidated for a while. And so tell me what happened in, let's see, June, July. In between June, July, is that right? Yeah. Hold on. Let me get out of this weekly chart. So what happened between June and July in 2020?
Well, that's really where we had completed the transition of selling off the power converter business. We made some changes, basically to our team, getting ourselves focused on the semiconductor space and really focusing on the position the company to start bringing the technology to market.
Okay. So when that happened, that's kind of when you had your breakout moment and the stock started to stair step higher, right?
Yes. Yep.
Now I will tell you that the $7 area is a pretty, for the technical guys, and I understand I'm a technical and a fundamental guy. So the only reason why I know technicals is because I want to have an idea in my head as to what the technical guys will just trade specifically off the chart. They don't, a lot of times they don't even know what the company does. They don't care. They just trade off the technicals. So in my head, I want to know what's triggering them and what they may do. So it's at an interesting spot with the $7. And the reason I say that is because over here, it acted as a resistance area, actually all the way back to here, right? Back to 2018. That was kind of a resistance area to get above. And now you're sitting right on top of that. So, and it's acted as support here, here, and now here. So that is going to be considered a significant area of support. If it cracks that and it closes below it, I don't care if it pierces it throughout the trading day, but if it closes below, that's going to be an indicator for the shorts or the technical guys to pile on, right? Regardless of what you've got going on, you could have the biggest contract in the world getting ready to sign. They don't care. They're going to pile on because the technicals gave way, right? You've got what is called the death cross, which is the 50-day cross below the 200-day, as it's named. Pretty obvious that is not a positive thing, right? But if you can maintain this $7 area, and it does look to me like the 50-day moving average is starting to flatten, and you're in this thing, I like to call it a trading box, right? So you've kind of been bouncing between, what is this, nine and change, right? And down to this $7 area. And it could just literally continue to do that and trade sideways for till the next catalyst occurs, right? Which would be perfectly okay with me, because that just kind of solidifies that this is the floor, right? And if it breaks below that and closes below that, knowing what I know, that the company doesn't have any debt, that you're working with the military, you're working with some big name companies that you cannot disclose, and you are now through the design phase, you're in the sales phase right now.
Exactly.
Right. And for me, I would like to get involved as close to the $7 area as possible with the starter. And then if it breaks below, I'm just going to get, I will look for another area of potential support.
Mhm.
And that would be actually somewhere around the $5 to anywhere under 7 down to 5 or 4.95, somewhere in that area. I would consider a zone that I would start maybe aggressively at it.
Yeah.
Right. But I wanted to go back here to the weekly. What's interesting about this is this was coiling up. You were actually kind of coiling up, and if you could see where this, and you wound up breaking below instead of breaking out to the upside, right? But you're sitting right on top of the 200-week moving average, which is this white line.
Yeah.
So that's another potential support for you, for the stock, right?
Yeah. Yeah.
So it's in my head, the market is undecided. The bulls aren't in control. The bears aren't in control. It's just kind of in a wait and see mode, if that makes any sense.
It does. Yeah.
All right. So I consider this, I mean, look, you've got, how many shares are actually in the float? Do you know that number?
No, because
I'll look. Hold on a second.
Yeah.
I'll look.
We got a bunch of large holders that just don't trade.
And there is insider participation as well, right?
Yes. Yep.
All right. So let me just pull this up real quick. IPWR. And let's see. So in the float, you guys have, I don't know if that's accurate. Looks like maybe about 5 million shares in the float, but that doesn't sound right.
No,
that sounds wrong.
Yeah,
this data is wrong, because I'm looking at this. You've got 16, almost 17% insiders ownership, right? And then you've got about 19% that's owned by institutions.
Yeah.
So that does not equate. That looks like that's wrong. So I'll have to dig into that. But my guess is you guys are maybe 2 million, maybe in the float somewhere.
I think it's probably between 2 and 3, somewhere in there would be my guess. Yeah.
Yeah. Okay. So it wouldn't take a whole heck of a lot with that kind of a float, with any kind of significant news from the military, from anybody.
Could move the stock a lot.
A lot.
Yeah.
Right.
Yep.
And I'm not telling anybody to buy the stock, because that's not what I do. I'm not a financial advisor, but I do think you guys are a potential disruptor.
Yeah.
Right.
Yes.
And it's at the right time for the right cause. I mean, environmentally friendly, right?
Yep.
Making companies more efficient. You've got the SEC who wants to start, finding out what people's carbon footprint is. You've got ESG. You got a lot of things, and not only that, but you keep reading articles that if we don't change what we're doing, it's going to be the end of the world a lot sooner than people are predicting, right?
Yeah.
So
correct.
There's a big sense of urgency to make things happen.
Yeah.
So I think you guys, unless I'm just stupid, are positioned extremely well, right?
We think so too. I mean, that's why we're so excited about what we're doing. It's why, even as a small company, we've been able to attract some world-class talent, both in the company and also the players that we work with. I mean, think about it. Think about how big Teledyne is. Why would Teledyne want to work with a tiny little company like us if they didn't think there was something pretty significant there in terms of potential, So,
and your track record is taking
technology, commercialize it, and grow in the revenue. Yeah.
And you're right on so let me ask you this, from your previous experience.
Yeah.
Where would you say, if this was a baseball game, where are you in terms of achieving what you've set out to do?
That's a tough one, because I have big expectations for this place. Yeah. So I would tell you, to me, we're at the top of the second inning, because we got the team, we got all the equipment, we're on the field, but the bulk of the game in terms of growth of the company, capturing customers is all right in front of us. So, it's a case where, anything can happen. We've certainly seen the last year or so has been pretty crazy in terms of all things that have been going on, but we're in a position where, because of the balance sheet, because of where we are with the technology, we can just say to the team, just ignore all that, keep our head down, let's focus on what we got to do and not worry about all the noise. Because
right, we didn't even talk about the fact that you had COVID,
Yep.
right, that
Yeah.
you've had to deal with.
Yep.
Which I'm sure set you back, right? I mean, there's only so much.
It's created challenges. It still creates challenges. We're not through it yet. I mean, you got, supply chain things that are more nuisance now versus complete disruptions, but it's still an impediment for hiring. People don't want to relocate with COVID going on. So, you got to work around those sort of things.
And then you've got Russia and Ukraine and inflation.
Yep.
Right.
Yeah.
But thankfully, you're in a position that you're not going to have to go borrow or raise capital.
Exactly.
Right?
Yep.
I mean, so at the end of this year, what would you consider, man, this was a really good, successful year. We accomplished what we set out to do. And on the flip side, what would be the, damn, this did not go how we wanted it to go?
The positive would be we did our Navy demonstration. That would be done behind us. It would be we won a DOE demonstration project where our technology would be an enabler. It would be we were able to start announcing who some of the companies are that we're working with. It'd be adding some new ones that would be names that people would recognize, and it'd be introducing our first commercial product for sale. Having it ready for people to actually start taking it up. If we missed a couple of those, to me, it'd be a disappointment, because I think we're really on track to do all those things. So, I'm easily disappointed. Guys will tell you, I can be a hard guy to work for at times. My expectations are high, but we have the ability to do it. We got the people and the resources to do what we got to do.
What's your biggest challenge today? Is it I mean, do you feel as though you're well staffed? Do you feel as though you need more salespeople? Or
the biggest challenge today is hiring technical people. Your sales and business development folks, they can be remote, but you want your technical team to be co-located. And we've had a couple of great people that we wanted to hire that wanted to join us, but either they or their spouse didn't want to relocate while the pandemic's going on. And some of them keep reaching out saying, hey, I'm still interested. But to me, that's the big challenge. And as I've talked to some of the recruiters, it seems like it is a really common problem right now. People just don't want to relocate to change jobs, no matter how good the opportunity is.
Yeah, that seems to be a very common theme is for a lot of companies is people, getting people.
Yep,
right?
It is. But that too will improve. We just got to be patient. It's been an ongoing struggle, I think, at least for companies that I talk to. It's been at least a year and a half. People have been trying to work their way through it, and it's tiring at times. You really see good people that would be a great addition to your team, would be a good fit culturally, but there's that fear factor because we've been through a couple of these cycles of we think we're getting through COVID, and all of a sudden it ramps back up again.
All right, Dan, listen, I mean, is there anything that you feel as though maybe I've missed that you want to highlight, or do you think we've kind of covered everything?
I think you hit the high points. I mean, I think you got a good snapshot of who we are, what we're doing, and where our technology plays, and what the benefit is that it brings. So I think you did a good job. Yeah.
I think this is this could be a really defining year for you guys.
Absolutely. Right? Yeah.
All right. Dan, I want to thank you for coming in and doing the interview. I'm gonna wrap this up. Don't go anywhere. Again, thank you very much. And listen, and maybe in the next quarter or two, let's have a follow-up and just kind of take a temperature of where you're at.
Yeah, I'd love to. I appreciate you having me on.
Okay, perfect. All right, thanks. Hold on one second. Hey there, all you stock market junkies. Thanks for tuning in to yet another CEO interview here at Alpha Wolf Trading. Today we had Ideal Power Inc., ticker symbol IPWR, with CEO Dan Bradr. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.